Latest business news for you now on the programme, and Stephen Carroll is back with us after his trip to Davos last week. Stephen, good to have you back on the programme. You're starting with Facebook, aren't you, which has seen its profit soar. This is despite, of course, the privacy scandals engulfing Facebook over the last year or so.
Profits up, always good news for investors, and shares in Facebook were up by over 11% in after-hours trading after it's published its earnings for the last 3 months of 2018. Net profits at the social networking giant were up over 60% for the quarter. That's compared to the same period a year earlier. If we look at the whole of 2018, profits and revenues jumped at Facebook. Remember, this is in a year when the company suffered the biggest scandal in its history when it emerged that the political consultancy Cambridge Analytica had harvested data from the social network. Solange Mougin has the story.
Tough year, but you wouldn't know it from the numbers. For Facebook, 2018 came with heightened scrutiny, concerns over data leaks, manipulation of elections, and growing fears about how the tech giant uses its members' information. Red flags and criticism that haven't affected its bottom line, though. Facebook has released its final quarter figures for 2018, and its earnings were better than expected. Yearly net profit was up 39% to hit $22 billion, and revenue was equally promising. Some good news for the company, after 2 previous quarters showed a dip in the number of people using Facebook in Europe, where much of its ad revenue comes from and where new privacy laws had been put in place. The positive figures show that despite concerns from watchdogs, politicians, and users, the network remains for advertisers one of the net's most effective platforms, thanks to the amount of information that Facebook collects to target ads for its growing number of users. In December last year, 1.5 billion people used the social media brand every day. That's a jump of nearly 10%. And 2.7 billion used one of the Facebook-owned apps, be it WhatsApp, Instagram, or Messenger, every month. A staggeringly large number of people that has made Facebook so attractive for ad placement. It remains the second biggest destination for ad spending online after Google. For Facebook is expected to count for a fifth of the market in 2019.
Real long-term relationships.
Well, meanwhile, operating profits at Samsung fell by almost 30% in the 3 months to the end of December. That was down to slowing demand for its memory chips and smartphones. Now, the South Korean company still finished 2018 with record annual profits and revenues, but expects its business to slow down this year. Let's check in on what's happening on the markets for you next. European shares starting the day up. Shares in the oil company Shell up around 3% after their latest earnings reports. This is the picture across London, Paris and Frankfurt. The US Federal Reserve creating some cheer in Asia today. That was after it said that it could afford to wait before raising interest rates again. The Nikkei in Tokyo finishing up 1%. But that news from Samsung dragging down the Kospi in Seoul, which is the only main Asian market seeing some red on the charts there. The Fed's comments also helping to drive down the value of the dollar. That's left the euro trading for $1.15 and just under 88 pence sterling, of course, as the Brexit drama rolls on in the currency markets as well. Meanwhile, investment in the UK car production UK car production plunged by almost half in 2018. That was as fears over Brexit weighed heavily on the industry. Britain's Society of Motor Manufacturers showed that car production also fell by 9% in 2018. The organisation warning that a no-deal Brexit would be catastrophic for the industry, which relies heavily on parts and finished cars moving seamlessly in and out of the EU. The head of the SMMT has called for UK politicians to be pragmatic in their approach to leaving the EU.
The arrangements that will be agreed for the long term, and that is still unclear. What we need most urgently is a deal. The prospect of no deal would be incredibly damaging for this sector. To leave without a deal would be, quite frankly, catastrophic for the industry.
There's been another high-profile resignation at Tesla. The departure of the electric car maker's financial chief, Deepak Ahuja, was announced during a press conference call with investors, as the company reported a profit for the second quarter in a row. Investors took the news badly, though, Tesla's shares falling by more than 4% in after-hours trading on Wall Street. Well, finally for me, Wednesday was a very good day for the main owner of the French luxury group LVMH. Bernard Arnault saw his personal fortune increase by over $4 billion in a single day after the firm's shares rose by almost 7% in Paris. That was thanks to greater Chinese demand for Louis Vuitton handbags and Hennessy cognac. According to Bloomberg's billionaires list, Mr. Arnault is the world's fourth richest man in the world after Amazon founder Jeff Bezos, Bill Gates of Microsoft and the super investor Warren Buffett. After Facebook's good results, though, Mark Zuckerberg may see him leapfrog up the list as well. He's potentially moving to 5th if we see gains in Facebook's share price. Stuart.
All because of cognac and handbags.
Not too bad.
Not bad. Thank you, Stephen. Stephen Carroll on France 24.